My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Something's changed. The market is, for lack of a more poetic term, better. The cynics and the naysayers, they've been stunned, at least momentarily, as plain old ordinary stock making a comeback. Long-ignored household names are emerging from the shadow of the Magnificent Seven, and their stocks are making you money again after a long hiatus. That's the story today. Even the broader average did next to nothing. Dow creeping up 2 points, S&P advancing 0.13%, NASDAQ inching up 0.08%. How'd this happen? This sea change. Interest rates, that's how. As long as longer-term bond yields were going up, and we knew they were going to keep going up, you had to stick with companies that had exceptional growth no matter what interest rates did, meaning usually tech and drugs. Somehow, perhaps because the pharmaceutical industry is so stultified, the drug companies failed to deliver. That left tech as the lone standard bearer, bolstered by the enterprise software plays, and yes, indeed, the Mag 7. But now that loan rates have pulled back dramatically from their highs, we're in a different world. One that is actually more hospitable to the rest of the stock market. Some could say a little less hospitable to Mag 7, but that may be because of some changes at a company called Microsoft. I'll leave that to the people who know more about what exactly happened there, because my thing is this and you. Yeah, I think the bull is finally out of the Mag 7 ring, and there's no better test case than what will happen next week, the truncated week of Thanksgiving, when a whole host of potential potential touchdowns away. I'm sorry, I had to do this. I used to, when I started this show like 47 years ago, put my hand in and draw it. But now they've replaced that with an actual turkey. I think my hand does a better turkey than anything else. There. Okay, today Citigroup upgraded Zoom video from sell to hold. Zoom reports Monday night. I wonder if we can finally break out of the seemingly endless post-COVID funk that it's been in. It won't be easy, given how Microsoft's using its huge installed base of Windows computers to push people to switch to their own video conference platform, whether you like it or not. Does that thing pop up all the time for you? It does for me. I can't turn it off. Anything that shows an uptick in some of Zoom's adjacencies could ignite the stock. Tuesday is, look at this, it's insane. We're getting a deluge of earnings, especially retail earnings, as though the CEOs of these companies are maybe trying to give me a pre-Thanksgiving heart attack. Let's go through them. In the morning, we start with Best Buy. Now, here's one of those companies that people have written off because, like Zoom, it has a COVID hangover. During the pandemic, we seem to have bought everything we needed to set up a home office, and that's not something you need to set up regularly once you've done it. We don't need more appliances either, judging by those dismal Whirlpool numbers that we got a couple weeks ago. Again, though, this week, Gap and Ross Stores and Macy's all reported upside surprises. And if you owned their stocks ahead of time, well, you made out like a bandit. So let's think. Best Buy, over 5% yield, very good management, could also surprise the upside. Actually, doesn't it seem almost logical? Next, Burlington Stores, an off-price gem, is a rough one to game. This week, their key rivals, TJX and Ross Stores, both reported. TJX gave you stunningly good results, but a light forecast, while Ross gave you good results and a good forecast. We own TJX for the Chapel Trust, and so we knew it had a habit of issuing incredibly conservative guidance and then knocking it down, and that's exactly what happened. History says you have to buy that sell-off, and that's exactly what we're doing, and I hope you're doing. Ross just went straight up. Unfortunately, we don't know which pike Burlington's going to take. Maybe it's easier to just keep buying TJX. That's what we pretty much said at our Wednesday monthly club call. What else? Have investors been spoiled by the success of Abercrombie & Fitch? This turnaround was multiple years in the making, so I think it's too early to jump ship. Dick's Sporting Goods has been tricky, so I'm not going to try to game it. I'll only say that, like Best Buy, Dick's Sporting Goods seems dirt cheap to me. Kohl's reports, too, and there was a time when we thought something could happen to move this thing higher. These days, though, we just want something less than a disaster. That said, do you know what? I think CEO Tom Kingsbury did a fabulous job back when he was running Burlington Stores before he took the Kohl's job. To me, the risk reward here says buy. But the stock did have a big move today in sympathy with the big move in Gap. Finally, remember when Home Depot was being panned widely, and I told you that the fact is it had a pulse, any pulse was a good sign, and then it soared? I bet the same goes for Lowe's, which has a terrific do-it-yourself business. We got housing start numbers today, and they were a little stronger than expected. You know, that doesn't hurt for the stock either. One more reason why I like the stock of Lowe's down here. Next, where is that elusive infrastructure money? Remember the $1 trillion package that was going to spur building unlike anything we've ever seen in this country since the Great Depression? Well, maybe Jacob Solutions can tell us. It's a terrific operator with a huge engineering construction business, so if anybody would know, it's these guys. Tuesday morning, we also hear from Baidu, the big Chinese search engine. At one point, all these Chinese internet stocks were on fire. Back then, Baidu was the Chinese Google, and it tracked with Alibaba, the Chinese Amazon. But this week, Alibaba imploded, meaning it reported a just okay quarter and then gave up on its cloud spinoff. While griping about not being able to get the state-of-the-art American semiconductors, I have to wonder if Baidu's in the same boat or rut. Remember, I do not like the Chinese stock market or Chinese stocks that list over here, and more on that dreadful group later. Tuesday night features perhaps the most anticipated earnings report of the quarter from Cramer fave NVIDIA. I don't like buying the stock ahead of the quarter, although it rewarded you for doing that last time. I have reservations about betting on the results, though, because the stock has had quite the run in anticipation of another monster-sized guide-up like it gave you last time. That is not a good setup. Still, I reiterate that you should own NVIDIA, don't trade it, because it remains the king of AI semiconductors. The outperformance here has been staggering, but so is the product. You know, hey, by the way, I'm tired of hearing about other companies that have some knockoff NVIDIA chips waiting in the wings for them. Forget the knockoff. Show me the money. I keep thinking that the personal computer stocks will have their day in the sun like they used to. Remember, though, people bought a huge amount of tech hardware during the pandemic, and since then, the industry hasn't come up with anything impressive enough to make you want to upgrade. So can HP tell us a different story when it reports? Maybe they got something good in the hopper. I sure hope so, because there's no getting around the fact that we need new PCs packed with kinds of artificial intelligence that we keep hearing about if HP stock wants to go higher. They sure aren't making them now. Next, can Nordstrom ever break out of its funk? The department store chain, always known for its service, now recognizes the cost of providing that service can be very darn high and not as lucrative as it used to be. Oh, and if you need help finding something you like, you ever heard of Amazon? They got this thing called inferencing, and they know better than you. They know better than any salesperson what you might want. I can't think of a way to save this chain without a merger. Say, without maybe, I don't know, another herding company? Finally, on Wednesday, we hear from a company that was a consistent winner for years, but has done nothing for you of late, and that is Deere. That's because, like so many other commodities, the price of grain has collapsed. Farmers tend not to buy new equipment if the current harvest doesn't produce bountiful profits. I've been telling people that Deere's a good enough company to hold on through the down ag cycle. That strategy is going to be sorely tested when Deere tells us about this quarter. Here's the bottom line. Next week is historically a pretty positive time, but I'm cognizant that we've had a big run here. However, if we get a continuation of the rotation into beaten down retailers, along with a huge guide up by NVIDIA, I don't know, maybe everything will work during an albeit shortened week. Gobble. Terry in Ohio. Terry.
Booyah, Ski Daddy. This is your longtime fan and very happy club member, Terry in Ohio.
Thank you, Terry. I hope you liked our club meeting on Wednesday. Jeff shined. He's got that new name I like so much. It's from your area. You know that.
Oh, love it, love it, love it. Hey, Jim, I really appreciate everything you've tried to teach me about investing, but that still didn't stop me from making a bonehead mistake with one of my largest holdings. And I'm hoping Professor Cramer can help me fix my trade.
Basically, I have tenure. I can say anything I want. That's what they do at colleges, right? If you have tenure, you can do whatever you want, even if you're bad. But I try to be good, so let's go to work.
Okay. Like you, I was disappointed that Exxon didn't offer a better price at the buyout. And when you sold the entire club holding, I only let go of a quarter of my shares, hoping for a better price. I have a much smaller position in Coterra, and was wondering what you would recommend I do with Pioneer now that it's well below.
Great question, Terry, and thank you for those kind words. What I would say is that oil seems to be bouncing from the $70 level, 72. I would say, yeah, maybe it bounces to maybe 75, 77, and when that happens, I think you'll probably be able to get, I don't know, 240, 242 for Pioneer. I want you to sell it, and I want you to put the money in Coterra. That's the plan. But we did make money in Pioneer, so let's not fret too much. Let's fret the ones where we lose the money in. I'm cognizant that we've had a big run here, people. However, if this rotation to beaten down retailers continues, we could have another very strong week. Hey, by the way, you get spared on Thursday on Mad Money Tonight. The S&P 500 may be higher this week, but out of the 500 names in the index, do you know that only 14 have outperformed the benchmark every year for the past 5 years? I'm going to run down the list of names. I find it very revealing. I love to do these kinds of screens. Then it was a big week for U.S.-China relations as tensions seemingly thaw. Hey, what could it mean for China IPOs? I'm giving you my take. You may not like it. Plus, this week we hosted our monthly meeting for CNBC Investing Club subscribers, and we could, like Charlie, and we couldn't get to all the amazing questions. So we decided to keep the momentum going with another round tonight. You do not want to miss it. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.